So how would you like to pay zero income tax on 100% of your income? Well, the Trump campaign has floated the idea of eliminating income tax altogether, which is gaining a lot of attention right now.
Did you just float out the idea of getting rid of income taxes and replacing it with tariffs?
Well, okay.
Were you serious about that?
Yeah, sure, but why not?
So basically, instead of having an income tax, his campaign is suggesting to raise tariffs on foreign producers to raise revenue for the federal government. On his website, his proposal specifically states that as tariffs on foreign producers go up, taxes on American workers, families, and businesses can come down. Now, this has raised a number of questions, from if this could actually pass Congress to how it could affect the economy, inflation, and ultimately what we want to know is this a legitimate possibility or just smoke and mirrors? So as a licensed CPA that has fully reviewed this tax proposal in detail, and as someone who tax plans every day at mycpacoach.com, I want to provide you with a very simple understanding of this concept, my thoughts on if this will actually pass, and the potential impacts to you if it does. So let's go ahead and jump right into it. Go ahead and drop a comment as you watch this to let me know what you think, and let's go ahead and dive in. Okay, so let's break this down. This would basically be a tariff for tax cut policy that would cut taxes and replace the difference with a new type of tax, which in this case would be tariffs. Now, obviously, income tax is based on your income. So the more income you earn, the more tax you will pay on that. We know this. But tariffs, on the other hand, are a tax on foreign producers who are looking to sell goods to the US. So in theory, we would get a tax cut at the expense of foreign companies paying more taxes to the government. For example, let's say I make a toy in China worth $100 and sell it to a US-based company. Well, when my toy arrives to the US, the customs officials would assess a tax on the item based on its value. So if that tax is 10%, then I, the foreign producer, would pay a $10 tax to the US government in order to sell my products in the country. So that's basically how tariffs works. It is simply a tax on imported goods that is paid by foreign producers to get their products into the US. And Trump is proposing to increase tariffs by so much that it could end up replacing income tax to some degree or even completely. Now, as crazy as this may sound to some people, it is important for everyone to know that this concept is not new by any stretch of the imagination. In fact, it existed before income tax ever came about and was the primary source of revenue for the government in the 18th and 19th century. Income tax was only supposed to be a temporary tax when it first came about. It was first used as an emergency measure for the US government to cover costs related to the Civil War in the 1860s, and after the war, the tax was eliminated. For example, just look at this chart published on the White House's website. As you can see, the share of tariff revenue was nearly 100% of federal revenue until about the 1860s when the war began. And this is because the government started collecting income tax during this time period. And once they stopped collecting this tax, the share of tariff revenue increased again. But then in 1913, the 16th Amendment was passed and income tax became a permanent tax. And ever since then, we've seen tax rates fluctuate up and down over the last century. And when we fast forward to where we are today, income tax is now the most significant source of revenue for the federal government. Almost 70% of government revenues are from some form of income tax when we account for individual income tax, corporate income tax, and social insurance taxes that fund things like Social Security and Medicare, which are still based on your income. So basically, we went from a world where we only had tariffs and no income tax to a world where now income tax is the most prevalent form of tax in the US. And this idea of eliminating income tax by increasing tariffs is something that has existed in the past, and Trump is floating the idea of returning to that line of thinking. But let's talk about the challenges of something like this actually going into effect, and then I'll give you my opinion on this as well. So the first major challenge is going to be raising enough tax revenue from tariffs to replace income tax. So in 2023, the federal government collected $2.6 trillion in individual income tax and corporate income tax. So in order for tariffs to replace these two taxes, I would think that would mean we would have to have $2.6 trillion in tax from tariffs. But the initial proposal to increase tariffs would only add about $80 billion in tax revenue, according to the Tax Foundation, which would mean that there would have to be a huge increase in tariffs to even get close to replacing individual or corporate income tax. And to further complicate the matter, there is a lot of speculation around these tariffs resulting in higher prices and decreased demand for foreign goods, which could potentially result in less tax revenue for the government, amongst many other things like the potential for higher prices, for example. But that's just one piece of this big puzzle. The next big challenge is going to be addressing the federal deficit. So if you don't know anything about this, let me simplify this for you in a few seconds here. First and foremost, taxes fund almost everything that the government spends money on. So our military, your Social Security benefits, Medicare benefits, and many other government programs are mostly funded by taxes. But the problem is that the government is not currently collecting enough money in taxes to pay for these government programs. It is already spending more money than it collects in taxes, and it has been that way practically for decades now. And it is only expected to increase more over the next few years. Now, this has not been much of a problem because when the government does not have enough tax revenue to cover its spending, it simply starts borrowing money. But that actually leads us to the next big problem here, which is the fact that the national debt has skyrocketed to record levels and is currently over $33 trillion. And like anyone with debt, we have to pay interest on that debt. And as that debt rises, so does our interest expense, resulting in a higher interest expense over time, leading some to estimate that our interest expense could account to be as high as 40% of our tax revenues in 30 years. So just imagine 40% of every dollar you earn going to interest expense. That's almost half your income, and that does not even include the principal required to begin paying that debt down. Well, that's basically the possibility for our federal government if it does not fix its spending problem. So remember, we have two big problems here. Number one, the government is spending more money than it earns. And number two, the national debt increasing is going to cause the government to spend even more money, simply making the deficit worse in future years. With that said, let's talk about the solutions here and how this ties into the idea of eliminating income tax. So in the perfect world, the government will spend less money than it earns. And there are really only two ways they can accomplish this. Either A, to increase taxes more from where they are today, which we know is not something that Trump wants to do, or B, cut government spending from where we are today, which is actually a part of his plan. But then there is the question of how much of that spending can he actually cut? So let's take a stab at this ourselves. Just take a look at this chart of our spending in 2023 and tell me where you would cut spending in the comments below. So first, there's about $3.8 trillion of mandatory spending on things that we probably can't touch, like Social Security, Medicare, Medicaid, and so on. Because if we start taking money from those programs, it will probably cause an uproar. Then we spend another $800 billion in military spending. And with global tensions rising and talks of a third world war, we have to ask ourselves if that's something we want to cut as well. And with that alone, by the way, we're already at $4.6 trillion in spending, which already exceeds our tax revenue of $4.4 trillion for the year. But we're not even done yet. Of course, we cannot default on our national debt, so we also have to pay a $650 billion interest expense, which leaves us only with this $900 billion discretionary non-defense expense. And even if we cut this entire expense category, which I highly doubt could even happen, we would have spent $5.2 trillion already, still leaving us with an $800 billion deficit. So you tell me, do you think we can eliminate income tax in a world where our national debt is at record levels, where we spend more money than what we collect in revenue already, and in a world where there is uncertainty around if we would collect enough revenue from tariffs to replace income tax? I personally think that it is unlikely, and I think the campaign knows this as well.
Are you proposing eliminating all federal income taxes in a Trump-Vance administration?
Well, Donald Trump didn't propose that. He set that as an aspirational goal.
Okay, so he did not propose it, and it is an aspirational goal. Right. Yeah, I would not count on this one, but if it did somehow pass, trust me, I would be the first in line. But let me know what you think in the comments below. Obviously, outside of this, there are still many things in Trump's tax plan that could pass, from extending the 2017 cuts to cutting taxes on tips, Social Security income, overtime, and so on. I already have content on this channel for you regarding those things, so make sure you subscribe for that. And if you currently pay a lot of money in taxes and you want a plan that is guaranteed to reduce it, just apply to work with one of my CPAs today at mycpacoach.com.